Welcome to Capital Link's company presentation series.
I am Nicholas Bornos of Capital Link, and I would like to welcome you all to the 2025 Capital Link company presentation series. In this series, company management highlights the company's current operations, business development, strategy, growth prospects, and sector outlook. We have with us today the senior management team of TEN Limited. We have Dr. Nikos Tsakos, founder and CEO, Mr. George Saroglou, President and Chief Operating Officer, Mr. Kosmatos, Co-Chief Financial Officer, Mr. Dimitris Bertolis, Chief Investment Officer, and Ms. Clio Hatzimichali, Legal Counsel and Secretary. Founded in 1993, is one of the world's most established public shipping companies. Celebrating 31 years as a public company, TEN operates a diversified fleet of 74 vessels, including 12 new buildings, and the fleet is consisting of tankers, crude oil tankers, product tankers, and LNG carriers. The company shares are listed on the New York Stock Exchange under the ticker symbol TEN, TEN. Now, in terms of logistics, we will start with a brief company presentation, which will be followed by live Q&A, those who participate in the webinar today can submit your questions through the Q&A button at the bottom of the screen. Your questions are going to be replied during the Q&A session. Now, before we can proceed with the presentation, a brief reminder of the usual disclaimer that this presentation is for educational and informational purposes only, does not constitute an offer to buy or sell securities or investment advice or advice of any kind, and Capital Link bears no responsibility for the content. And as a further disclosure, we have the privilege to work with TEN on investor relations. And with this, I will turn the floor over to Dr. Tsakos and the management team.
Thank you, Nick. It's nice to start the year with talking to you, to the investment community. And the year 2024 has been a milestone year for us in TEN, a year of growth, a year of further modernization, a profitable year. And 2025 has started, I would say, on the right foot. There's a lot of business to be had, and our model is a model of stability and responsible growth over the years. And I think 2024 was a significant growth year, and 2025 will be similar. Every signal we get is of a huge appetite by our clients for more coverage, more long-term business. As I have said before, we could, if you let us, we could charter the whole fleet with an average of 3 to 5 years out as we speak today. However, through profit sharings and through spot market exposure, we try and to have a significant upside while keeping a very solid base. I think why TEN, as Nick said, is one of the oldest, most established companies out there, and you can see in the presentation at the top. You can share the screen with us. So we've been, the company has been through significant ups and downs, but we have tried to take cyclicality out of a very cyclical market. And that has given us the opportunity to have uninterrupted dividends and uninterrupted growth. We have one of the largest and most modern tanker fleets out there. We are diversified, which means that we follow the requirements of tonnage of our clients. 60% of our business is for a handful of major oil companies. We tend to focus primarily 90% of our business to the major oil concerns and some state oil companies. We do very little business, and on long term with traders or secondary or clients. This has given us the opportunity to secure close to 2 billion as we speak now, because this was in December, of new business going forward. We've been able, in an environment of inflation, and we hear every government trying to bring down inflation around the world, including the new U.S. administration, and that's what we try also to do in our small state of 10, comparatively small in comparison to a country, but still very diversified. We have been able to reduce operating expenses, increase efficiency in a very in difficult circumstances. Very solid balance sheet, fleet value of at least 4 billion. Low debt. Actually, our net debt is lower than that, Harry. It's around one. Our net debt is about 1.5 billion. So if you subtract and divide, we're a very simple company. You will see that our share price should be significant, at least double of where it is today. So the company has a very, very low valuation. Our last year's our EPS is almost it's almost 2 or 3 times earnings as we speak. And we believe that there is a very good upside for the company, and the management puts its money where its mouth is, because we are the largest shareholder and we've never sold a single share. We keep on buying shares for the company. Well, this and then a seasoned, as you see from our white hair, quite a seasoned company, but with a very young fleet. So we balance each other out. A very diversified fleet, and a company that has gone through a lot of crisis, always growing, always profitable. So, and this is our very diversified fleet, which we're very proud of. We have a lot of new vessels being built, selling older ships, and growing significantly the business going forward. Next page. I think I touched on that. That's the majority of our client list, of which we're very, very proud of, and with whom we've been doing business for many, many decades, and we've never really had any issues, any legal cases with our. And with that, I will ask Harris to give us a little bit of numbers.
Sure. So before I give you those numbers, perhaps it's best if we go back on the slide, on the fleet slide, so you can see how we operate, what kind of vessels generate the revenues that we accumulate and we distribute to yourselves and to other projects that the company is looking. So as Nikos said, we have vessels in every single category. We're probably the most diversified tanker operator out there in the peer group. We have vessels from the very large crude carriers, the VLCCs that you see on the top, down to the smaller handy-sized product tankers and the side sectors of LNG shuttle tankers. You can see various colors on that slide. So effectively, what you see here is how we employ the fleet. And we have 3 ways to generate revenue and in a way to soothe the cyclicality out of the market. On the first, you see the dark blue vessels. These are the vessels that have secure revenue employment. So whatever happens, the vessel will earn that rate that we have agreed at the outset, irrespective of where the market goes. However, because we like to play in the market, we like to be in the market, we have devised this lighter blue category. These are the vessels that operate in a profit sharing under profit sharing contracts, which means that they have a minimum base rate which covers the vessel's all-in break-even. And I'll go to that other slide that Nikos passed on to me just now. So for us, it's very important that irrespective of where we are in the market, those vessels will not be losing any money. And should rates go above that minimum, then we share the upside with the oil majors that employ our vessels. And because we like to be in the market, we like to be on the radar screen of those big oil majors, we have also vessels in pure spot trades. These are the red vessels here. So as you can see, we have a very large complement of vessels with secured revenue contracts. Again, dark blue and lighter blue. But on the other hand, a very kind of material number of vessels generating, playing the market, generating kind of spot-related rates, and in a way play the upside. So on the one hand, with us, whoever invests with us knows that there is cash flow visibility, cash flow security, in order to cover the company's expenses, and also a decent and notable play on the upside. And this is the slide that Nikos alluded to earlier. So you can see on the left the vessels all in break even. So these numbers are very manageable, irrespective of where we are in the market. And the result of our employment policy, you see on the right-hand side on that bar chart, where those vessels that I mentioned earlier, the lighter blue and the dark blue vessels, generate revenues to cover the entire fleet expenses. So as you can see there from the green bar, these are the revenues that those vessels have generated. And as you can see, it's very visible. It's almost double the company's expenses. So for us, this is the epitome of the company's employment, to soothe the cyclicality out of the market. And anything above that is spot revenues, which obviously we use for various, for the company cash, dividends, and growth projects. Managing debt, obviously, all companies have debt. You need debt to grow. Managing debt is something very important, something that we have done very comfortably over the years. We have a slew of banks ready to finance our growth projects at very competitive rates. We have recently embarked in an ambitious growth program by acquiring vessels from the second-hand market and building new vessels against long-term contracts to big oil majors. Still at very good, very manageable, very comfortable levels at 44% net debt to cap. And these are the kind of levels, and as you can see historically, that we like to maintain. So again, safeguarding the company in terms of debt and not adding any additional layers of risk when it comes to potential market downturns. Very quickly here, you see how we have managed to divest some of our first-generation vessels. 13 vessels have been sold over the last year or so, and have been replaced by 21 vessels, a combination of modern second-hand dual-fuel vessels and the new building vessels that I alluded earlier. We do not necessarily have a specific kind of target sector that we target. It all depends on the client's needs. So, and hence the diversity. So if a client wants a Panamax, we're going to build a Panamax. If they want a shuttle tanker, we're going to build a shuttle tanker. The same with the suezmax crude carriers. So anything that our client wants, and they offer us a very attractive long-term contract, we go out and build. And hence we are, in a way, the company of choice for the long-term contracts of the big oil majors. Dividends, something that the company has a very good track record, an enviable track record, should I say, over the years. We have never failed to pay a dividend, and the board has adopted a semi-annual dividend policy, and so far we have paid $1.50 for 2024, which is 50% higher the rate that we paid the year prior. So for us, depending on the company's needs, the growth projects, and obviously market circumstances, the dividend is adjusted accordingly.
Which is over the years has an average yield of 5.25%, which is respectable in a very, very cyclical market.
So very quickly on
go back to the figures. Okay. So here, I mean, this is again more than 20 years of history that shows that the company has always had conservative debt, even in very, very difficult markets, maintain ample liquidity. And I think what I want to take out of this slide before Mr. Saroglou takes us through the market conditions is that how, as I said again, how cheap in any metric TEN is. If you look at this, we are right now, I would say 4 times net income for 2004. If you look at that, and we are less, or we're about two times EBITDA. I think these are multiples for companies that are in danger of actually jumping out of this window, and we're on the 7th floor. Any moment now, the CFO, would be arrested and forced to jump from the building. But 10, after 31 years, they're still most of them here alive and growing. So I think the multiples are very, very, very low because we just follow the cyclicality of a market, although we have tried very hard to take the cyclicality out of what we're doing, and we've been very successful because we've been around for quite some time. And with that, I will ask our president, Mr. Saroglou, to go quickly through this camera, what's going through the market.
Thank you very much. Looking at the fundamentals of the business, we start with global oil demand, which continues to be very strong and growing year after year after COVID, after the COVID pandemic. We have this shift in the trade routes, which as the war in Europe and created this dislocation of Russian barrels, which in the past were finding a home mainly in Europe, and now they have to go to India and China, and most probably this is not going to last for too long with the new administration in the US. And this we have Europe, which is a major importer of crude oil and products that has to source right now from longer distances, both crude oil and products. And this has been very beneficial for tanker trades and for TEN. We are in an environment that the global GDP continues to grow. And as mentioned previously, well, I think this positive headwinds that we have are going to be with us, are going to continue as the world understands that crude oil, fossil fuels, will be in the mix going forward, and we'll see our clients, the oil majors, to continue going after new discoveries from far away, from offshore places, etc., etc. Looking at the supply and demand of tankers, again, here it's very favorable for our industry, as a big part of the fleet is getting older. We have, almost 2,500 vessels that are over 15 years, which more or less cover the order book, which if we look at in comparison to what the order book has been through the years, it's still at very manageable, very low levels. Scrapping activity has not been significant lately, and this is as a result of the strong market we have experiencing in the last 2.5 years. But this is something that we expect to pick up as almost 44 or almost 45% of the fleet is over 15 years, and almost 20% is over 20 years of age. And with the new environmental regulations that are upon us, we feel that this scrapping is going to pick up.
I think, George, it's very important to drive home to the audience that, and going back on this slide, it seems there is a misconception of the market and the war in the Ukraine. And sometimes when certain politicians or certain geopolitical events allude to a potential ending of the war, we see not only 10 across the board, we see a heavy pressure on the stock because people believe that the strength of the market was the result of Russia's invasion in the Ukraine. It couldn't be anything more kind of wrong perception than that. As you can see, the market, the order book is at still very low levels. The vessels above 15 years are almost three times the size of the order book. So by the time those new buildings join the fleet, at the similar time frame, we could have 3 times over vessels exiting the fleet. So the result of that could mean that in certain sectors we could see negative growth because not enough vessels will join in order to replace those departing. And this is something that many people miss. And I think it's very important for you to focus that the market fundamentals are still very healthy, irrespective of what happens to the war in the Ukraine, even if the war ends tomorrow. The market has been bifurcated. We have almost 900 vessels that have jumped over the fence to do the Russian trades. So the Western trades that we operate could very soon be undersupplied of modern vessels. So irrespective of where we are, let me reiterate that the market fundamentals are very, very solid.
And the sanction on those vessels that are involved in these great trades involving Russian,
which they cannot come back.
And the latest sanction list is hitting even countries that traditionally have used these vessels, like China and India. Most probably, this 10% of the vessels that are involved in this gray fleet, they will gradually start exiting the market because they can't even find a home in India or in China to bring their cargoes.
Yeah, and if anything, if sanctions are lifted, which they will not overnight, those Russian barrels will start flowing back, and how will they travel across the world? On oil tankers. So again, it's something an underlying positiveness that could transpire out of that worst case scenario that many investors are fearing. And I think with that, we could open the floor in the sense that you can submit your questions, and we would be delighted to answer as many as we can.
Okay.
Thank you very much.
Thank you very much. See the question time.
Okay.
Good. Yeah.
There are many questions.
So we start with the ones that have a name. So George, I think George has a good, a lot of companies, a lot of questions from us, and let's see. So how negative is the influence of the dark fleet on charter rates? I would say, George, that the influence of the dark fleet is not negative. I would say it could have a positive effect for first-class companies with very, very modern ships like ours, because those older vessels used to be the ships that would bring, when they were non-sanctioned, those were the vessels that would be undercut the rates of young, modern, dual-fuel vessels like ours. So I do not think there is a negative. I believe it's right now it's more positive than negative. As I think both Harris and George said, we run both. Sorry about the phone. We run both clean and dirty vessels, and this gives us the opportunity to have this arbitrage, which can be very useful, mainly during refinery maintenance periods and shutdown periods. I mean, or periods as we're facing now. As you know, we have quite a large ice class fleet, and this ice class fleet now is getting a significant premium for trading. Your next question makes sense. Yes, it makes sense to, and this is our next target, is maintain dividend. And as you know, we have been very aggressively bought back our preferreds from the company's cash. However, I don't think we can buy them before 2027.
27 the earliest, yeah.
So our aim is, we're maintaining enough liquidity, building liquidity to repurchase at par the remaining preferreds. And as you know, our preferreds have been trading historically above par, and they have been a very successful way to raise, I think, growth at the time to product. So I think the anonymous, the first question from one of our anonymous friends Anonymous. Yes, I mean, we are the tankers that we will be getting. Hopefully, they will be earning significantly more than the 50,000 a day that you estimate. I think we are looking perhaps 10,000 or more per vessel in the Paris and Athens category, and I would say another 10,000 more than your estimate on at least on the Dr. Irena Tsakos.
Για κατέβα. Increases due to sanctions. Rate increases.
I think on the question of David about sanctions, in Iran, I think again we are promoting, and we believe that open seas are very, very effective and I think positive for tanker trading. However, because ships have propellers, I think we are not blocked. We are not being blocked, and we can trade in non-sanction areas. So if there is more, I think if there is more sanctions on Iran, it could have at least a short to medium term positive translation to the bottom of our rates, because the Iranian oil today, a big majority of it goes east. If this route is blocked and sanctioned, you will have more ton miles and perhaps a little bit more health on the VLCC vessels that will have to bring the oil east. Yes, Nessie, κατέβαινε λίγο. Και αυτός. Sorry, that's Jorgen has a very long question, which we're carefully reading. Jorgen, thank you, and thank you for being a shareholder for a very long time. Yeah, I mean, we always, the question is very long, but I think the essence is that we should be buying shares instead of ships. I think, Jorgen, I mean, what you're saying is very, very, very logical. However, please remember that we are not an investment company. We are a shipping company, and we grow our business based on the requirements of our clients. We need to modernize our fleet. The buyback can be I mean, we've done buybacks in the past, and they have unfortunately did not work because the company is still small with a 30 million flow. of which this 30 million, close to 40% is held by management and the family. So really, if we start buying, and of course the family management, we're not selling. So if we start buying more and more, it will shrink the flow and it will become even more illiquid. So it is, although mathematically you are completely right what you're saying, I prefer so far to pay out dividends, but we do not exclude doing a small or a limited buyback going forward. Zach, what is the impact of the Houthi ceasefire in the Red Sea on your business? Well, I think this will be a very significant time. We will let the time pass. It's still very early. We and other companies like us of the peer group have been not taking our ships and putting our crew at risk. And as I said, open seas are positive for business, but we need some time to pass by before we decide to go through there. Προχώρα. Κάτω. Could you provide more details on the anticipated impact of your new building program? Well, I think Harris mentioned that in the last 8 quarters, we have a very dynamic renewal of the fleet, selling 17 vessels and 13 vessels,
21,
and ordering and buying 21. We sold ships with an average age of 17 years old, and we bought ships with an average age of 1. So huge, big dual fuel capabilities and a big renewing of our fleet. I think we expect the majority of our ships are on long-term employments, 1.8 billion going forward. So we will see a significant increase hopefully in net income and of course in the freights.
Για άλλα κάτω. Yeah, there are many buyback questions which Nikos has answered. Some market questions I see here that.
Good. And yes, on the ROE, I think I believe our ROE is very respectable. I think we have a 15% ROE year after year after year as an average going forward, and it's something predictable. Some of our peer group, I think, as Harris and George said, they tend to have more ups and downs, and we try to take cyclicality and put predictability in this market.
Okay, there.
Good. Well, and in the last, I think this will not take more of your time, but there's one more question on LNG. TEN has been a company that was one of early starters in LNG. However, the board and the management never felt comfortable with the changing technologies that were taking place in this very, very expensive and high market segment of the market. So by the time we ordered our first ship, the very successful Neo Energy, a new technology has evolved. By the time we did the Maria Energy, again, a new technology. By the time we did the TEN Energy, I think now technology starts, although there's always there's always a modern and a better ship. But I find out that technology right now starts to stabilize. It's the only segment of the energy business which is overbuilt. I mean, it's a huge overbuilding out there, and of course opportunities will happen. So TEN is committed to continue in gas. We have in-house capabilities. We have a very long experience. We have very good name with our clients, and we're looking forward to look at assets when they become logically priced again, which I expect it to happen at least within 25, mostly within 2026, because the segment is overbuilt. And with that, we would like to. Oh, and I have a question who's asking, and this is the final, who is the woman in the painting of the wall under the. Well, thank you for asking. This is my late sister, a big part of, passed away very, very young on a trip to New York about 15 years ago. And our foundation, which is named after her, Maria Tsakos Foundation, does a lot of work in educating and taking care of young people. And right now our education runs 3 schools in our native island of in Greece, the island of Chios, where we educate underprivileged young men and women, and also run the first independent maritime academy in Greece. So thank you for asking. It's my sister Maria Tsakos, and quite a few of our ships, if you look in the list, bear her name, like the Maria Energy, Maria Princess, and so on and so forth. And with that, we would like to thank you. Wish everybody Happy New Year, and looking forward to see you very soon in our visits in New York and the United States. Nico, thank you very much.
Well, thank you very much to all of you for being with us today. We had the privilege to have with us the management team of TEN, Dr. Nikos Tsakos, founder and CEO, Mr. George Saroglou, President and Chief Operating Officer, Mr. Kosmatos, Co-CFO, Mr. Dimitris Bertolis, Chief Investment Officer, and Clio Hatzimichali, who is the legal counsel and secretary for the company. So Nico, Harry, George, Clio, and Dimitris, thank you for being with us today. It was a very insightful discussion. You had an avalanche of questions, I think indicative of investor interest in the sector and, of course, the company. So thank you to all of our participants.
Thank you, Nick. Stay warm where you are, and see you soon.
Thank you. And as a reminder to everybody, this webinar will be available for replay upon demand very soon. It will be available on the Capital Link Webinars website, capitallinkwebinars.com, and on Capital Link's YouTube channel. Thank you very much to everybody.
Thank you.
Thank you. Bye-bye.